If you have been living under a rock, you have not noticed that interest rates have absolutely skyrocketed. Let me give an example here. We have a property in Columbus. We owe about $6 million on it. And there's a thing called defeasance, or essentially a prepayment penalty. What that means is we locked in a rate years ago. And if that rate goes lower, we have a penalty to pay because the bank's like, listen, we're going to lock this rate in for you, but we want to make our guaranteed money. But if rates go higher, all of a sudden our really attractive low rate looks very good and we could be in the positive. At one point, our penalty was $1.5 million on a $6 million loan. That is absurd. Today, we're in the positive $500,000 on that. So we could essentially get that $500,000 by getting rid of that loan.
Right.
Okay. So what does that mean for commercial real estate? Well, guys, I read yesterday, and I don't know if this is true, but I read that in the next 5 years, $2.5 trillion worth of commercial real estate mortgages are coming due.
Wow.
When do you think those mortgages were locked in?
Pretty low interest rate times.
Who did not refinance their property in the last five years?
Yeah, you had to be crazy not to, or not paying any attention.
If you're a real estate, expert, where you have enough big properties where you go, wait a second, you're telling me I can just take my mortgage, just refinance it the same amount, but now my interest rate is 2% lower?
Yeah, you should have taken that all day.
And you did. And we did.
Yeah.
Right?
And this is what that stat means.
Now, not trying to be alarmist, but look at just residential mortgages.
Yeah.
99% of residential mortgages right now are currently below the going 30-year mortgage rate, which means you're only getting a new mortgage if you have to buy a home or have to sell whatever it is. That's the only time you are getting a new mortgage right now.
Correct.
You are not refinancing unless you have suddenly tons of equity in your home.
Yep.
So how can this work out okay? Mo, so because you're not a real estate guy, you invest in our real estate deals because you just say, well, you guys are smart, so you're stupid enough to give us a check.
Mm-hmm. You haven't messed up yet.
We have not messed up yet. In order for this to work out okay, what has to happen?
I don't know.
Well,
I don't. This almost is like rock and hard place situation. It's because of the number of dollars that are out there that are in this situation. That's why I see it that way.
Okay, well, here's what has to happen.
Okay.
Income needs to go up. This inflation's helping this, right? Right,
Yeah.
Mo? So let's say, for example, you have an apartment building, and the apartment building makes $100,000 a year. Well, the next 5 years, with inflation, that grows at 10% a year. Well, suddenly, your property's making $160,000 with compounded growth in 5 years. And if all of a sudden your mortgage rate goes up 50%, you can afford that. You're like, oh, well, I'm making 50%, 60% more. So it's not a guarantee that all these mortgages are going to come due and all of a sudden the world's going to fall. Mm-hmm. Now, I said last year, I don't know if I'm necessarily convinced that home prices will go down. Yeah. They have gone down. But you know what hasn't gone down? New home prices. Mm. If somebody wants a new home now, you got to pay.
You're still there was a home down in Naples that I was looking at. That thing sold for over ask.
Really?
Still. It wasn't a brand new home, but it was 100% a remodel. Very nice remodel that was done.
Well, that's the thing.
Move-in ready,
That's the thing.
Yeah.
These things don't necessarily all have to work out a certain way. 2.5 trillion commercial mortgage, that's a lot of money. Blah. I get it. It is a lot. And it is scary. And if your rate was 3%, let's say this way, on a 2.5 trillion, if the rate on average is 3.5% and now it's 6%, that's a 2.5% difference on $2.5 trillion. Just do the math. But I guarantee if it's apartment buildings, their rents are up. If it's commercial, like office buildings, their rents are not up. No, that's the concern I have.
Yeah, that's kind of where, when I said that number is so big, that 2.5 trillion, then income's going up, isn't that a concern?
What do you mean?
Of the, not necessarily apartments, but because they're not all apartments. Incomes going up don't help that side.
That is correct.
That's where I'm like, okay, it's a little more multifaceted than just income.
And we have two problems on the commercial side. So you own an office building.
Yeah.
The problems are everybody's trying to work from home now.
Right.
Commercial office vacancy is through the roof insane. Second problem is when you bring a tenant for a commercial office, it's 5, 10, 15 years with options. So if you have options in there for 3% bumps, but inflation's 8%, how much does that help you?
It doesn't help you at all.
So that's the issue. Yeah. That's the issue.
Yeah.
When we're looking at this and we're looking at apartment buildings, we love it because you know why? Every year, once a year, that apartment lease gets renewed. Well, our costs go up, we increase the cost for the tenant. They understand that. They accept this. We upgrade units, we get a higher rent. These are the things we can do to get much higher rents as time goes on.
Right.
It's going to be much easier to get those rent bumps. Now, with that said, I've also seen in the last 6 months, apartment rents have started to go down nationwide, right? Okay. This is all part of the yin and yang, guys, of the way markets move.
Yeah.
2.5 trillion is a big number. We hear that. And of course, when I hear that number, I go, well, relative to what though? Right? Now, it is going to cost people more money. It's going to absolutely cost me more money that when I want to refinance that $6 million. And by the way, that property that we owe $6 million on, do you know what it's worth?
Like 25 or something?
Yeah, upwards of 25. It's all day long, 21 or 22, maybe upwards of 25. So we have all this equity sitting there. And we're like, man, what do we do? Do we take another mortgage out there, take that equity, go buy something else with it? But then you sit there and say, okay, well, what about this? We're putting money into the property. So we are going to be refinancing this property at some point. And our rate currently is 4.5%. Now, you might sit there and say, well, that's not so bad. It wasn't, because when we first locked this rate in, that was a good rate. But when it went down to 3.25, we were like, son of a bitch.
Yeah, exactly.
But now the same rate is 6%.
Right.
Or 5.5 to 6%. So now this looks like a really, really good rate. But that means when we refinance, we're going to get a bump. And with a higher mortgage amount, it's going to cost us even more money. So if we increase our mortgage amount by 2.5 times and our rate goes up by 25%, do the math. We're going to make less money on the property. But we can then take that money and go out there and hopefully somebody else who owed a lot more than they could afford on the property, there might be an issue there. And that's what we're hoping for. Is that going to happen? I don't know. I really have no idea, guys. All I know is that rates are higher today than they were, and I'm quite sure anybody in the real estate business has refinanced their property in the last 3 to 5 years. They were crazy if they didn't.
Insane.
In the last 3 years, COVID hit, rates plummeted. Rates absolutely, it was so low that banks started giving them a floor. Like, we're not going below this rate. We're just going to make a ton more money. Okay, because it was hard to justify 2.5%.
Right.
Right? Now, this is the world of commercial real estate. I don't know how it's going to play out. In terms of apartments and houses, you can still be okay by driving your rents up, but you still need to be a landlord who's okay driving rents up. It's funny. I'm one of the few landlords I know that loves driving rents up. Everybody else is like, no, I just want to keep my property full.
I don't understand why you would not want to drive your rents up.
Because you want to because it's much, you know why?
So if you drive your rents up, you could still keep your properties full. It's just going to be a little bit more challenging. But at some point.
Who asked this question? Which question's asked more? What's your occupancy or what's your average rent?
What's your average rent?
No one ever asked that question.
Are you talking about the layman person or the person in the industry?
Oh, even people in the industry. I don't ever get the question, what's your average rent? You know what I get? What's your occupancy?
Oh, I've heard the what's your average rent?
Really?
That's the people I talk to.
Yeah, us. You talk to us. You don't talk to everybody else.
Well, what I mean just like him. I'm not going to ask. I mean, if he owned a building, I would be like, well, I wouldn't ask the question of what's your average rent.
No, the question I get I know people who own thousands and thousands and thousands of apartments, and they'll ask me, what's your occupancy? And I always say, don't you care what my average rent is? Well, you know, there's the apartment building that Nick lives in.
Yeah.
I've been trying to buy from that owner forever. You know why? He's $250 below market. But you know what he loves?
So cheap.
He loves going to his investors and saying we're 100% full.
occupied.
I had to pull a favor to get Nick an apartment. I had to call him up and say, Steve, this guy's coming to work for me. We're friends. You owe me. He's like, call this lady. She'll set you
You're
up.
like 4 months out now. You're on like a 4-month waiting list to get in there. Longer than
4 months wait list.
Longer than that.
But that's what happens when your rents are so low.
Yeah.
And his rents are super low. He's raised his rents 3 or 4% a year for the last 5 years.
It's crazy.
Yeah, it should be way higher than that.
Yeah.
We have properties in worse areas that we're raising rents 10, 12%. But we're doing a lot of money, putting a lot of money into the properties.
Right.
Steve does not, which is okay. But if I went in there and put in granite countertops and marble backsplash and new cabinets and new light fixtures, Nick, what's your rent? Yeah, I'd be charging every bit of $1,100.
That's for 2 bedroom, $825 for 1 bedroom. Okay.
1 bedroom. I'd be at $1,100 probably.
Yeah.
So that's the way the world works. Commercial real estate might have a future in the next few years that are tough. We'll see how it plays out. Again, there's so many factors involved to say one thing for sure. Now, if you told me exactly where rents would be in the next 5 years and where income growth was going, I could probably calculate some sort of reasonable expectation of where commercial real estates are going to have their issues. But I don't know that. And it could work out plenty fine if inflation stays up. Guys, if you like this, I want you to do two things for me. 1, subscribe to the channel. 2, share this video with somebody who's been thinking about interest rates and commercial real estate. Thank you very much for your time.